With Vishal Sikka riding shotgun, India's second largest IT company by revenue is moving forward in FY18, powered by its focus on automation, digital and new services. However, while Infosys has registered growth across key sectors and markets in the first quarter of FY18, it is not blind to the challenges that lie ahead. That's why it has retained its constant currency revenue growth guidance at 6.5 to 8.5%. Revenue growth in dollar terms is expected at 7.1 to 9.1% against the previous guidance of 6.1 to 8.1%, taking currency movement into account.
We had a wonderful Q1. I am proud of our team's execution in this quarter. We expect high growth, and obviously starting in the subsequent quarters, now that we have the basis from this quarter onwards, we will disclose relative growth numbers. The 10% is the contribution to this quarter's revenue. This is a reflection of the vitality of the company, is how much of the revenue, and of course the growth curve on this is much higher than the growth curve of the company.
Its largest vertical, that's banking, financial services and insurance, or BFSI, grew 2.6% this past quarter. But given ongoing challenges in the American market, Infosys believes the sector will be volatile in the near term, with a pickup expected only in the second half of the year. Retail and manufacturing verticals are also expected to see some volatility in the coming months.
Our expectation is it will continue to be volatile. Difficult to put a timeline to that. This quarter we had a good performance in retail. When you look at BFSI, our performance is on expected lines. We believe we have a dominant position in that space. We have captured a lot of market share in the last few quarters. So we are fairly optimistic about that space. We are doing well in Europe and rest of the world. I think the high tech is one area within manufacturing where we believe it is soft, and we expect that to continue at least for in the near future.
In the slightly more sluggish European market, Infosys is busy repurposing its consulting business. This exercise will take a year, but the company says some of the benefits are already flowing in.
The benefits to some extent from a margin improvement have already started coming in. Even this quarter, consulting delivered slightly better margin than we had in the budget.
But what the street is happiest about is the pleasant surprise on the margins front. Despite several headwinds, including currency volatility, increased visa costs, a spike in local hiring, and a jump in variable payout, Infosys has maintained margins at 24.1%. Indications that even as Infosys continues to be cautious on its outlook on margins, it is watching for levers to drive margin growth has also brought comfort.
If I step back and look at the last 2 years, right? Our operating margin has been resilient despite multiple headwinds of pricing or cross-currency movements and so on. For this year, we gave 23 to 25, keeping in view multiple factors. One, of course, is the rupee peaks, which has already appreciated on average basis 3.5%.
Yeah.
So that was taken into account. Second factor, of course, the U.S. talent model ramp-up was taken into account, and the compensation increase. So when we gave that band of 23 to 25, we took into account all these factors, though we exited the last year at 24.7.
The other good news for investors came in the form of assurances that Infosys was going ahead with its plan to return almost $2 billion to its shareholders, and execution would take place as soon as possible.
There is a lot of clarity on what is the capital allocation policy. We clearly said how much of the cash on the balance sheet as of today. We say up to 13,000 crores will be returned to shareholders. There is also clarity on how much of future cash flow will be returned to the shareholders. We have again said up to 70% of the cash flow.
Yeah.
There has been a lot of clarity and predictability in that. I think, as I said earlier, as we are a globally listed company with large global shareholder base, we need approvals from multiple regulators, which to finalize a mechanism in which this would happen, and we are hopeful that we will close it in a timely manner.
The company was also quick to say that the forward movement on its capital allocation plan had nothing to do with reports that the promoters could be looking to sell their stake in the company. As far as FY18 goes, MD and CEO Vishal Sikka is confident of a strong run because, as he puts it,
I'm a Taurus, so being a bull is in my nature.
with Kritika Saxena in Bengaluru, in Mumbai, Arundhati Ramanan.